Alright, this is crazy. A new study shows that people believe the stock market is rigged.
Now, I gotta tell you, one of the first things I learned when I started on Wall Street is that the system is not fair.
Roughly 41% of people that do not invest their money in the markets believe that the stock market is rigged. But what's more interesting is that 56% of people, or more than half, that do invest their money in the markets also agree. So in today's video, I want to talk about all the different ways that the stock market cheats. Now, if you were to come to my city here in Las Vegas and we went to a casino together, you might be tempted to sit down at a game of blackjack and maybe play some games. But if you saw the dealer shuffle cards like this, you'd probably think twice about sitting down to play. And investing in the stock market can sometimes feel like that. Like somebody's just cheating, just not as obviously as the card shuffling sequence I just showed you, which took me like 10 years to get good at. And that's because the stock market cheats in ways that are a lot more subtle and secretive. So in today's video, I want to talk about all the different ways that people are convinced the stock market is rigged against us, how you can use it to your advantage, and hopefully answer the ultimate question, if the stock market is truly rigged or not. This is exciting. This is gonna be a good one, so let's begin. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magic. It's a classic this time. Doesn't make any sense. It's a rigged finger. It's a rigged stock market. So let's talk about the first factor that makes people think that the stock market is rigged. And that is something you've probably heard of before, and that is called insider trading, or otherwise known as asymmetric information. And this just means that one party gets access to a key piece of information that gives them some sort of an inherent advantage over the other party that doesn't have access to this information. And one of the most famous examples of this illegal insider trading was with a company called Imclone and Martha Stewart, when Martha was able to sell 4,000 shares of the company Imclone right before the FDA disclosed to the public that it would not approve a drug called Erbitux, which was supposed to be a drug for cancer. Now, a lot of the investors in that deal lost a ton of their money, but not the biggest clients, because the CEO warned them ahead of time, and Martha was able to sell 4,000 shares and make something like $250,000 because of a key piece of information that she knew that the public would not know about until it was too late. Now that is insider trading, and it's illegal, which is also why Martha Stewart was sentenced to 5 months and fined $30,000, which is kind of interesting considering that it's a lot less money than she actually made. But not all types of insider trading is illegal. There are other techniques that give our members of Congress, for example, an inherent advantage over ordinary people like us, and it's perfectly allowed. So this next one, I want to give full credit to the subreddit Superstonk for posting this article, so full credit to the author, but it shows how the government can stack the deck in its favor and take advantage of the stock market, and here's how. Politics, which comes from the Greek word politikos, which means of the citizens or of the people. And that's why whenever we elect people in Congress, hopefully we pick people that represent our best interest or the interest of the people. But sometimes the people we appoint forget who they're supposed to represent, and they represent big business instead, and they are given an inherent advantage. And one of the best examples of this is our current Treasury Secretary, who was appointed by the President of the US to oversee banks, to pay the bills of the United States, and to collect taxes. Pretty much anything relating with money she deals with. Now, her annual salary today is something like $221,400, which is a lot of money. But this right here is her financial disclosure report, where she's made $7.2 million. And that's a lot of money for somebody that's supposed to represent the interest of the people. So there might be some conflicts of interest. Now, I don't want to single her out because she's not the only one that does this. Lots of people in Congress do this, but she's a really great example of why people think the stock market might be rigged. These are some of her income streams from being hired as a consultant or public speaker. Now, some of these fees include tens of thousands, in some cases hundreds of thousands of dollars from some of her clients, most of which happen to be big banks like Citi, Barclays, Deutsche Bank, Goldman Sachs, Morgan Stanley, and Citadel, to name a few. Now, normally this would not be such a big deal if she was an ordinary employee of some company, but she is the Treasury Secretary in charge of overseeing and making sure that the banks don't step out of line, and she's being compensated quite a lot of money by them. Is that a conflict of interest? I'll tell you my thoughts at the end of this video, but the rabbit hole goes way deeper. In early 2020, our Congress was briefed about the first cases of the Roni Rona Yorona, and they were told that something bad was about to happen, which is why some of them sold off their stocks in anticipation of what was about to happen. And you could argue that they were given a piece of information that gave them an inherent advantage over everyone else. And here's at least 4 examples of senators that were able to sell millions of dollars of their stock portfolios. You can actually find this information for yourself on the EFD, which is the United States Senate Financial Disclosures website right here. But while you're here, let me just do it for you. The first example is from the chairman of the New York Stock Exchange and his wife, Kelly Loeffler, who sold no less than $355,000 of stock between January 24th and January 31st, 2020, which is right after they were briefed about a possible coming pandemic. Now, together they sold $890,000 of stock between February 5th and February 14th, which is right after the first few confirmed cases hit the US, but a few weeks before the public had any knowledge of it. Together they sold no less than $3 million of stocks before the stock market started to collapse at the tail end of February, but they were not the only ones. There was also Senator James Inhofe, who sold $230,000 of stock between January 28th, a few days after he was briefed, and February 20th, which is right before the market started to fall. There was also Senator Richard Burr, who sold between $628,000 to $1.72 million on February 13th. And last but not least, there was Senator Feinstein, who sold $1.5 million of stock on January 31st. Now, you could look at that and say, well, clearly that is insider trading because they had access to information that gave them an inherent advantage over everyone else. But this was all allowed and nobody was punished. Now, to be fair to the senators, they did respond to these allegations, which aren't really allegations because it's all public information, but they did respond and their responses were all the same. So here's a dramatic reenactment of what they said. Yeah, but I didn't physically touch the sell button myself though. Like, I didn't touch it. I didn't do it. But senators, you clearly knew something was wrong and you clearly informed your broker. Yeah, but agree to disagree. Somebody else manages my portfolio for me though. I didn't do it. That's just a few examples of how the stock market might be rigged, but there's something even more interesting. The third factor is arguably the single biggest reason why most people believe the stock market is rigged, and it can be perfectly encapsulated, encrusted, in a nutshell by the AMC and GameStop saga. Now, some people call these the meme stocks. I call them movement stocks because they highlight a social movement that hopefully exposes the potential sketchiness of Wall Street. And one of the techniques that Wall Street uses to cheat is something called short selling. Now, without getting too complicated, short selling is when you bet on a stock to go down. And Wall Street shorted over 140% of GameStop's stock. That means they shorted more than were available to trade in the first place. And this can be argued as a form of market manipulation because whenever you short sell a stock, you are borrowing it. But if you borrow more shares than are available in the market to borrow, you are artificially increasing its supply. And whenever you increase the supply of anything, you decrease its price. Not to mention that short sellers thrive on negative market sentiment, and they could put out negative press releases that are not always accurate because it is in their financial best interest to see a company suffer. But that's just short selling. That's just the beginning. The real problem is something called dark pools, which I also realize sounds like a Yu-Gi-Oh card. Heart of the cards, don't fail me now. I activate dark pools. But it's where sketchy things happen.
And I will be the first to admit that it's rigged in so many ways.
Now, dark pools are sometimes referred to as ATS, or alternative trading systems. And the reason that big institutions love these dark pools is because it gives them a ton of advantages. Like, for example, after they execute a trade, it gives them up to 3 hours to report on what they're doing, and this gives them even more advantages. It allows hedge funds to buy and sell stocks at massive quantities that are so big they would normally affect the price of the stock if those trades were done on a public exchange. And that's what we want. We want hedge funds to use public exchanges like we use because we would know about those trades the moment they happened. But this way, we don't know about them until it's too late. Another advantage of dark pools is that they don't have to pay broker fees. It gives them a ton of advantages because it saves them a ton of money. They get the best execution prices because arguably the biggest advantage of dark pools is that it allows hedge funds to buy and sell stocks that are below prices that are displayed on public exchanges. So for example, if I'm a player in the dark pool and I find out somehow, some insider knowledge that the next iPhone 13 is a poor design and it's not going to sell, I could theoretically dump all of my Apple shares, which would normally affect the price of the stock significantly, but I could get rid of them, which would not only potentially inform other players in the dark pools that, hey, this smart guy knows something we don't, let's copy him, but by the time this information is leaked to the public, it's just too late and the retail investor will get hurt. And that is just one of the many techniques that dark pools can use to their advantage. Now, normally, all of this should be perfectly fine and allowed because that's how the stock market works. If it was all public information like it is on the exchanges you and I use where prices are updated every single second because it gives us more information. It's what makes us more informed. But dark pools are allowed to operate behind closed doors without the public's knowledge, where there's anonymity and less regulatory oversight, and that's what gives us a huge disadvantage. And if there's anything that makes the stock market rigged, that's the single biggest reason. And yet, people like Janet Yellen are so quick to want to regulate assets like cryptocurrency and retail trading when they should focus instead on these unfair practices. All these Redditors getting together to short squeeze the competition is market manipulation, and we need to restructure the stock market and make it more fair. But you just manipulated the stock market with the dark pools and the naked short selling and the synthetic shares and the politicians with the insider knowledge. But you forgot the golden rule of investing. He who has the gold makes the rules. It's only illegal if you do it. I'm only kidding about all of that. So here are my personal thoughts on whether I think the stock market is actually rigged and set up against us. Let me think about that. Yes it is. And no, it's not. While I think it's true that there are isolated incidences of people in power that get access to special, privileged information that they then pass on to their wealthy families that makes them even more wealthy, I think that happens every single day, and it's going to continue to happen, and trying to regulate it or trying to make it illegal is just about as effective as trying to make greed illegal. It's just not going to happen because that's part of human nature, and that is to be expected. I also think it's true that every single day our Congress is most likely bribed. Lobbied. Lobbied is the right word, where they can influence laws and rules and regulations and policies that can affect certain sectors and industries like pharmaceuticals and finance and tech spaces that make them wealthier because it boosts their own holdings. And I also think it's true that large hedge funds have access to tools that ordinary people don't have access to. They have anonymity and they have access to cheaper stock prices, and they probably see an altogether new stock market that we don't even have access to. For all of those reasons, I do think that the stock market is 100% rigged and set up against us, but on the whole, it's not. It's weird. The market is just too big and too public to be manipulated as one whole thing. And despite these disadvantages that we face, we can still win. Because now that you know all of this information, you're gonna be faced with a choice. You can either sit the stock market out and leave your money out of investing while it loses 2% of its purchasing power every single year because we continue to print more money, or you could realize that the stock market will continue to be worth more, and that 10 years from now, it'll be worth more than it is today, because the world will be a bigger place tomorrow. One of the best pieces of advice that I've ever got, and that I could ever give anyone else, is that as long as you continue to buy broad market ETFs like VTI and VOO consistently, you'll win. Because the broad market index fund does not care about what dark pools are doing. It does not care which stocks are being shorted. It does not care which politician is being bribed to influence which sector, because the index fund owns them all. It owns them all and will continue to move forward because it follows the world of money. And where money goes, it goes with it, and that path is forward. So continue to buy these broad market index funds, sleep well, get rich slowly, and smash that like button knowing that everything's gonna be all right, because this video was pretty good. Yeah. As always, don't forget to have a great rest of your day. Subscribe if you haven't already. I don't know what's going on with my finger and my ring. It's like it's being manipulated somehow. Weird, Don't forget to grab up to $250 worth of free Bitcoin with this BlockFi link right here, blockfi.com/Andre. Go get your 2 free stonks with Webull. When you deposit $100 using my link down below, you can get 2 free stocks valued up to $2,300. Then go track them automatically with the spreadsheet link down below on my Patreon. Love you. Thank you so much for watching this video. I'll see you back here on Monday, Friday, sometimes a Wednesday, and I'd love to know your thoughts on whether you think the stock market is rigged or not. I'll see you soon. Bye-bye.